Hey everyone, welcome back to the channel. Today we are talking about Nio Stock, one of the most talked about Chinese electric car companies in the market right now. Nio just dropped big after its earning report, and a lot of people are confused. Should you buy this dip or should you stay away from this stock? Let's break it all down together, super simple and in a very super clear way. New stock is now trading at around $5.20, and just a few weeks ago it was at $7. So yes, as per the analysis, the new stock dropped a lot. Let's find out why it dropped and in the upcoming time what will happen to that stock. So stay tuned with us. New is a Chinese electric car company. Think of it like the Tesla of China. They make electric cars and sell them mostly in China, but their stock is available for American and Canadian investors to buy on the US stock market. So here is what happened. New published its financial results last week, and even though the results were actually pretty good, the stock still dropped. Right now, New is down 26% from its highest point in April. That means if you bought at the top, you lost almost one quarter of your money, and that's a very big drop. Now here is the interesting part. The actual business results were really very strong. News revenue in the first quarter of 2026 was $3.7 billion. That is higher than what analysts expected. They were expecting 3.55 billion and their revenue grew by 112% as compared to the last year. That means they more than doubled their revenue in just 1 year. Also, they delivered 83,465 cars, that is almost double their delivered last year. But here is the problem, even with all that growth, News still lost money. They made a net loss of $48 million in this quarter, and this hurts more because just 3 months ago, New made a profit for the very first time in their history. So investors were very hopeful and now seeing a loss again. That disappointed a lot of people. That is one big reason in the stock went down. There is also a second big reason for the drop. Chinese government through a body called the CSRC announced that they will start cracking down on cross-border stock trading. This means they are making it harder for Chinese companies to be traded on US stock markets. This is scary for investors because New is a Chinese company listed in the USA, and some brokers are already getting fined because of this new rule, so this adds more uncertainty to the stock. New is not alone in this. The whole Chinese electric vehicle sector is struggling right now. Li Auto is trading at $15.90, that is 66% below its all-time high. Xpeng is at $15.60 and below its highest point. Even BYD, the biggest Chinese electric vehicle company, dropped from $20 to $11.60. So this is not just a new problem, it's a whole sector problem. So Chinese government should take action to resolve this issue. Otherwise, maybe in upcoming time we will see the more decline in these stocks. What do analysts say? Now let's look at what professional analysts think. According to 26 analysts tracked by S&P Global, New has a consensus rating of buy. Their average price target is $6.90. So that means analysts think the stock could go up by 32% from here. That is a solid upside if they are right. But before we get too excited, let's also look at the risk. Number one is New is still losing money every quarter. Number two, the China government regulation risk is real and growing. Number three, New regularly needs to raise new money by selling more shares, and that brings the stock price down and down over the time. Number four thing is the whole Chinese electric vehicle market is in a bear market right now. These all EV companies are losing their points. These are serious risks that every investor must understand before buying. Okay, so here is what I personally think about New right now. The business is growing very fast, revenue is double, deliveries are double, that is impressive growth. But the loss come back and the China regulation risk is real. For me, New is a high risk, high reward stock right now. If you already own it, I would hold and wait. If you want to buy, only buy a small amount that you are okay if you lose it. Do not put all your money in this one stock. This is a stock for patient investors, not for quick profits. So, in order to summarize everything, New had a great quarter for revenue and deliveries, but the net loss comeback and the China regulation news scared investors. Analysts still say buy with a target of $6.90, but this stock carries a real risk. So please do your own research before making any decision. Okay, so that is it for today video. I hope this was helpful and easy to understand for you. If you want me to analyze another stock, let me know in the comments. Please give it a like and subscribe to the channel. It will help me to make more videos like this. So see you in the next one. Take care everyone. Goodbye.